Good morning. This is Ken Long from Tortoise Capital with a review of the weekend trading report for April 12, 2015. Markets in bullish normal conditions on an annual basis with weekly RSI 14. We're in the higher end of neutral at 58 out of 100. The 10-day NDX shows overbought at 99 out of 100 in the market mosaic. We're yellow bullish with price with respect to the 200-day moving average. The slope of the 50 has improved to white bullish. The ADX is still extremely non-trending or weak at 12.0. That is very favorable for this beginning bullish swing move that we're experiencing now. The risk index is the 30-period moving average of the VIX divided by the 10-period. The current reading is 1.03. 1.0 is the threshold between risk on and risk off. So we're at 1.03. We're in risk on conditions. Riskier assets are favored. If we take that score at 1.03 compared to the last 5,000 trading days, find the average and standard deviation, we can compute the z-score, or the risk z, which is now reading at 0.31. You can see the last 90 days of this indicator on the histogram here, and we've made a double bottom and just starting range expansion to the upside. That's why this is very favorable for a positive swing move here. No change to the blended monthly rebalancing. The current leaders as of Friday's close, you can see here for the various portfolios that we track. In ETF2, the theoretical exposure of the is 100%. The model portfolio is at 100% by adding a position in China MCHI. We had another opening for the live trading workshop, so there's still plenty of time to get linked up with us for that. If interested, give me a shout at longke@yahoo.com. These are the blended monthly rebalancing portfolios. I've added the 1 week and the 1 month percentages. We're still just using the 3 and the 6 month to create the blend, but I wanted to add some additional information to consider. And I've adjusted the spreadsheets to allow for various weightings for future excursions. So pretty much everything on a buy signal right now with strength across the board. This Under Armour looks really interesting to me with all the greens. It's green on one week, 1 month, 3 months, but still hasn't outperformed on the 6 months. So that Under Armour is one that leaps out at me, as is Boston Scientific and Mylan NV. Looks very interesting to me. So I'm kind of liking this, the new time dimensions added in here as well. This is the market health check. The vertical blue lines are 10, 20, and 30 days and 60 days of look back. The purple line is price target to the upside. If we take out looks like 211.5, all-time new high, and then we will be deeply into the next bullish move. The horizontal red lines are price levels that once acted as resistance. They're now support, and should price fail through the dragon or the Bollinger Band mean here, then these are the price targets I see on the downside. So this is the trading range right now from 211.5 to about 205. You can see the dark blue shaded area is the river. That's the 30-period Bollinger Band plus or minus 1. The floodplain is the lighter blue shaded area, Bollinger Band plus or minus 2. The dragon is a 10-period Bollinger Band plus or minus a half, and providing support on the way up, with price just leaving the river now. And so I really like this formation here with a low, a higher low, and a higher low in the dragon. This looks very favorable if we can get through 211, and then off we go. This blue channel here is the 10-period regression line, and the max excursion during the look-back period. The black channel here is the 30-period lagged by a day. This sine wave-looking line is the slope of the 30-period regression line. It's made an important turning point here down at a negative 0.15 slope, and is now moving up almost to even. And when that goes positive, that's a very favorable sign. So when you add up all these different signs, the slope of the 30 regression making a change, the jaws of PPO opening to the upside, temporarily overbought right here. This is a buying surge, and now we're going to check to see, is this a breakout above 211.5, or are we going to get chopped back into the channel here? This week will tell. Right now, with us in the green, I'm defaulting to a long-term long-side bias early in the trading day. When it's in the yellow zone, I am waiting for the market's direction to kind of settle out, so I take a little bit longer to commit. But right now, I'm definitely looking at rewarding the upside here. You can see the ETF2 regional report. Everything's on a buy signal, so that puts us at 100% exposed in the theoretical model, with EFA at 64, better than the S&P at 58. So the globals are still favored. Inside the U.S., it's the small caps at 64, mid cap 63, technology at 60, S&P at 58. Nothing exceptional here in the S&P extract, but we still got strength above average in discretionary healthcare staples and industrials. World market model, everything in the U.S. is above average. China, Hong Kong, Japan, Germany, and Netherlands leading the way. Latin America is still suffering, but emerging markets are doing pretty well right now. Brazil and Vietnam suffering also. The ETF top 30. Biotechs, China, and the hedge looking good. The green and white are the ones that are early in their life cycle of outperformance. So Hong Kong, Japan, Germany, the Russell Growth, Italy, and the Netherlands. In the Dow, still strength leaders here. Boeing, General Electric is interesting, very interesting, with a buyback that has some positive messaging in there. So let's take a look at that one. Shifting now to the daily report, a handful of swing setups, only a couple auto framer candidates setting up because of the expansion of this last week. 3 symbols in the Dow on the auto framer, Walmart, Travelers, United Health, quite a few frogs starting to appear. VIX has just been hammered, oil starting to get stronger. Some channeling and overreaction here in U.S. real estate and treasuries, and then the VIX and agriculture testing out on the auto framer. So not that many swing trades, as we're already well into a rebound in this cycle. And then finishing up here with a quick look at the auto framer and the regression line fractal framework for well-postured swing trades based on their trade locations under those two methodologies. So things looking good for the upside here. Excited about adding to momentum plays during the week. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.